All right, we are live. My name is Thomas Minard. I got Jared here with me. Jared, do you want to introduce yourself?
Yeah, Jared Nicolaisen with Key Mortgage Group out in Urbandale.
We are doing our video a little bit differently today. We don't have necessarily any slides to go through, but we just kind of want to talk about what interest rates have been doing lately and how that could potentially affect the market ending the year and then going into spring. Because the one thing to keep in mind too, your closes are typically between 30 or 45 days. So we're already getting to the point in the year where we're talking about all the contracts that people are going to be going under are going to be closing next year. One of
Yep.
the ones Jared and I are working together with right now is going to close in January. So just just kind of
Isn't that
something to
crazy?
keep in
Isn't
mind.
that crazy to think about? We're already talking about January.
I've already set my goals for 2023, and yeah, it's kind of crazy to think about, but you gotta have to think one or 2 months ahead. So, but we're talking
Yeah.
about interest rates. Jared, do you want to kind of talk about last week, kind of the big
Yeah.
shift or whatever you want to call it?
Yeah. I mean, so obviously the midterms happened. I want to say, what was it, the 10th? No, the 17th? Something like that. I don't know. 10th, I think. I think it was the 10th.
Yeah.
But essentially what happened is interest rates took a little bit of a drop after midterms, and shortly after midterms, the CPI report came out. So with all those things together, the CPI report came in better than expected, which is good news. And rates actually had a 0.5% drop that next day. So it's that's good news. But what I'm going to forewarn people is just because we've had a little bit of good news, don't fall in love with it because we've had a lot of bad news. And just like gambling, you kind of have to follow the trend line until we see the shift.
Yeah. So, what is that CPI report that you were talking about? Is that something that anyone can go look up or look at?
Yep, that's the consumer. I think it's Consumer Product Index, which
Yep.
Basically is
Inflation.
you can look that online. It's just the way that we measure inflation right now.
Okay.
The Consumer Price Index. There we go.
Yeah. So what you're looking at with that is it was finally one that came out that looked like we were starting to slow down inflation a little bit.
Exactly. Yep. So I think the expectation was like 0.7% month over month, but it came in at like 0.3%. So that's almost half as much as what they expected. And I mean, mortgage rates are really tied to inflation right now.
Mm-hmm.
So to see that inflation might be coming down, the market reacted accordingly.
Mm-hmm. So do you want to kind of talk about? Obviously no one here is going to stick you to a direct quote for rates as far as that goes. But how much did the national average interest rates kind of drop?
I mean, now you're seeing, as opposed to seeing stuff in the sevens, you're seeing things now in like the sixes.
Okay.
So
it's
a
substantial drop. So what buying power wise, what would that look like for a buyer for an interest rate to drop almost a whole percent?
I mean, it definitely depends on the loan amount. But what I would say, the way to measure that is for every 10,000, or for every just one simple way is like for every $10,000 in purchase price is about $50 a month in payment. But really, as the rates go down, that number starts to get more and more. So I would say you're probably with a 0.5%, you're probably looking at additional probably 10 to 15,000.
Okay.
Additional, depending on loan amount, obviously.
And then how much can this would definitely depend on the purchase price or the loan value amount, but I don't know if you could do this math in your head quickly, but $250,000 loan, how much would a 1% interest look like monthly payment wise? Because I mean, we're in a current market where affordability is the biggest issue. And the biggest issue with affordability is people want to know what their monthly payment is and can they handle it. And quicker interest rates go up, that affects your monthly payment almost directly, even if you're looking at a house that's the same exact price. So
I would say a 1% difference is probably, I would say, between 80 to $120 a month. I think difference probably closer to that 80 number, 80 to 100. But I mean, that's still enough where, I mean, that's pretty substantial, especially if you're looking right now and it saves you $80 a month. I mean, it may not seem much just by saying it out loud, but to you and me individually, I mean, that could be substantial.
Okay. So I've just spitfired a bunch of questions at you, and you're doing a good job handling them.
I'm
so,
trying.
so general consistency wise, what's the feeling? We're not expecting you to have a crystal ball or anything like this, but like, what's the general feeling about the next year? So, like, a lot of buyers I talk to start seriously thinking about it 6, 9 months in
Yep.
advance, maybe a year in advance. Is it currently at the point now where you're like, hey, if you know you're doing this within a year, maybe you should think about it right now because the general consensus is interest rates are going to go back up, or what? What's the general feeling?
So I'm gonna kind of pose this in a way that is similar to. I think it's where we might see something similar to what we saw in like 2021 in terms of the frenzy.
Okay.
But what I would expect right now is we're not until the Fed truly pivots, and the Fed is the one who sets these interest rates that banks borrow at. So it doesn't directly impact mortgage rates, but the Fed's positions on inflation does impact us. So if the Fed were to come out, and Jerome Powell is the head of the Fed, if he comes out and says, "Hey, we're going to stop raising interest rates and we're going to not raise interest rates anymore," I think the market would flip pretty quickly and rates would drop. I don't, from what he's saying, I don't think that's going to happen until the spring. Probably like February or March.
And
And if
correct me if I'm wrong, but their general thought right now is that, or at least what I'm hearing people expect, is that interest rates are going to kind of stay kind of right where they're at.
Mhm.
Not raise too much more, but I'm under the impression that we're not going to be seeing much of a drop in interest rates next year. Is that
I
correct?
don't, I don't think we're not going to. I think we'll see a drop probably like July and after next year.
Okay.
But that's assuming inflation is going to go down. But my thought is, if we after, you know, 12 to 18 months, we haven't seen inflation go down, there are some bigger issues at play than just mortgage rates, you know?
Mm-hmm. Mm-hmm.
So I think inflation is going to start coming down. I think this is the first bit of good news, and a good lagging indicator is the jobs. So you see unemployment, we're going to start seeing that start to tick up, and that's a telltale sign of a recession, a lagging indicator. And during a recession, that's when mortgage rates really start to come down.
Start to go down because they'll start trying to correct for that and everything
Yep.
like that. Get consumer confidence back up, get businesses back spending money, and
Yeah.
potentially hiring people. And I mean, locally in Iowa, I haven't really seen unemployment really be changed too much. I try to watch it a little bit. From my side of things, too, I would say the interest rates dipping down a little bit, making them a little bit more manageable. You still don't really love to see sixes, but there's always options that you can do later down the line. But on the seller side of things, I would say there's a lot of sellers right now that aren't feeling comfortable in the uncertainty.
Hmm.
So if you were kind of looking at potentially buying, I think as long as you find something that you're extremely comfortable with the price of it and you're comfortable that it's below market value, I think it's a good time to do it. Obviously, that was a lot of contingencies that I just put on there, but I think once it gets to that time, whether it's July, like Jared is saying, and interest rates start going down even more, I think sellers will start to get confident in their houses again, and you potentially wouldn't be able to get as good of a deal. I think it's something to think about too. So
Yeah.
it's always one thing or another. And if you truly have to wait for interest rates to go down to be able to afford the type of house that you're looking at, that's fine. But just be cautious of the fact that there's a lot of other potential buyers that are in your situation that are waiting for the exact same thing. So
Yeah. Yeah, and if I'm in the spot where a lot of people will think like, oh, home values are going to go way down. I mean, when there's not a lot of inventory, and we're still in a spot where there's not a ton of inventory.
yeah, the only place you're really looking at a surplus is new construction.
Mm-hmm.
Um, unless you're looking at resales that are in like what I would almost consider like your luxury prices, you can't really justify there being too much of a surplus. It is starting to, like, you'll look at homes that are listed up in the 400s, and it's starting to look like those are shifting towards the neutral market. But I mean, if you're looking at homes in that first time home buyer range, like below 300, it's still a pretty strong seller's market because there's still quite a few buyers out there that it's going to be their first home. And even with interest rates, comparing it to renting is still a win for them. So
Yeah. No, 100%. I think that's a great point to make, that like first-time home buyers have been rather, I mean, they've obviously been affected by interest rates, payments go up, but in terms of how they want to buy, they've kind of been rather unaffected on the level of that they're buying. I think that it's still heavily, I think our market is still heavily being moved by first-time home buyers.
yeah, and I think the other thing to keep in mind too is like Jared and I will get on these videos and talk in very general circumstances. If you want to know for your specific situation, you can always reach out to us and we can kind of talk to you about what would your monthly housing payment actually look like, as opposed to some calculators that you'll see out there that don't quite calculate it accurately. And we'll talk to you about what it comes with owning a home, what you can expect appreciation wise, because what happened in 2020 and 2021 honestly aren't realistic. So you can't really expect that. And then we'll be able to compare it to your current rental situation. So, like, for example, I just talked to someone on the phone today that is in a rental situation where he likes the place that he's renting and it's extremely cheap. And after we kind of talked through it, I was like, hey, you know what? It might be in your best interest just to kind of hold, save up cash, get a better down payment. And once the interest rates drop to a place that you're comfortable with, then go attack a home, you know?
Right.
And it's so dependent on people's situations. So.
Yeah. No, and I think right now is not a great time to over exert your finances on monthly payments.
Yeah.
I mean, consumer debt's at an all-time high. Student loan payments are coming back in January, so until we know that forgiveness is going to happen, it's right now is a great time to just keep cash on hand and be comfortable with payments, because buying a house is awesome, but it's not awesome when you're like struggling.
Yeah, and it's one of those things that just because such and such lender online, you filled out an application says you're approved to that max dollar amount. If you actually start looking at those monthly payments and you're not anywhere close to comfortable with that, it's probably not a good thing.
Right.
So, especially, yeah, it could put you in a very, very bad situation. So kind of have to make sure you're buying within budget, make sure you're comfortable with the monthly payment, and make sure you're with an agent that can confidently tell you that that house is worth what you're paying, and making sure you're getting a good deal.
Yeah. No, you're 100% right.
Is there anything else you wanted to make sure you talked about as far as interest rates go or anything like that?
I mean, my thing is, I keep the same standpoint. I mean, obviously rates impact your monthly payment, but monthly payment is always going to be the most important thing. Rates are what they are, and I mean, it's out of our control. It's set by people bigger than both of us. So if it makes sense for you financially and the monthly payment makes sense and you're comfortable, do it.
And if you're getting yourself into a product that's a fixed product, as opposed to, like, we've talked about ARMs before, and they can be really, really good options for people depending on what they're doing. But if you're getting yourself in a fixed product, the only way that your monthly payment is going to change is if the taxes change.
Right.
So there's just a lot of comfort in knowing that for sure. Because unfortunately, there's people that are in current renting situations that they really are okay with the monthly payment, but your monthly payment on your rental could always change. Like, so.
Yeah. No, I'll never forget a story. Somebody that I know, they were renting in Illinois or Chicago area. Their rent was $2,400 and it got raised to $3,200.
Yeah, and that's a situation where most people would just have to move. Like, there's not a lot of people that can afford that much of an increase in rent.
Right. Fuck, that'd be.
And if you're in a fixed rate mortgage product, that's just not going to happen to you. Like, taxes would not be able to increase that much to make that much of a effect.
Yeah, not monthly, maybe $800 over a year, which.
Yeah, I was just about to say, except for if you're in a city that you bought new construction and the tax abatement is done, that would change it possibly that much. That's the only exception.
Yeah. Yeah, but you're usually, I mean, if you're working with the right people, you're aware of that and know that's a possibility.
Yeah. And you can always, there's a lot of pretty unique things that they can do to set that up so you're prepared for that tax payment day too. So.
Yeah.
Just because the video is over doesn't mean you can't leave questions. So please leave comments below. Jared and I normally try to do 2 videos a month or so. So we will answer them either directly to you in a message or in a future video. So don't be afraid to leave questions. And thank you guys. Have a great day.